Jeff Heine, Chief Revenue Officer of Novidea. I see two big categories of risk happening. One is, climate change is happening, the weather patterns are changing, and what you're seeing is the impact on all sorts of risk across the globe, whether it's typhoons in Southeast Asia, wildfires in the US. It's happening, and it's not just affecting property, it's affecting all the different liability classes as well. So it's something that the industry is having to grapple with and starting to look at from a proactive perspective. The other is what used to be somewhat of a US phenomenon around litigation. Litigation finance, class action lawsuits, I'm seeing a trend. In fact, it's up 26% across the UK and continental Europe. So when you start to look at that, their pressures on the insurers are pretty pronounced, and it's issues that aren't going to be ignored. You have to deal with. In short, be proactive. What we see is the ability there's a lot of data available, being very proactive about understanding the nature of risks. We tend to work in the distribution market, so taking a more proactive set of measures with clients to understand where all their exposures are. What we can't expect is more bad weather. So making sure they fortify their properties, making sure they help their employees, customers, take a proactive piece on that. The other part of, when you start talking about, litigation is really to anticipate that, but also make sure you advise your clients on what those potential risks are. You think about litigation costs around cyber. There's more and more attacks and more events. We know that's going to happen. Take a proactive position and advise, and use technology to help advise. The role that technology plays in helping insurers, brokers, and others respond is by basically getting a proactive handle on what their clients actually need. That's actually a large part of what distribution is supposed to be about. But what's happened is there's been a lot of spreadsheets and different data and technologies that hasn't been exposed to people that can proactively manage and advise on those risks. Technology can help expose that, put it at the forefront, and kind of a bit of a sneak peek, bring the policyholder into that discussion to start to minimize that risk. And there's a number of implementations we see across the globe that are thinking about that. So it's giving a different opportunity. When you start thinking about the whole silo concept, that in a lot of ways it started around systems and data. Open AI, open APIs and systems that support that allow you to fuse these various systems into one system, but also data to get a holistic view of risk. That's kind of the holy grail that was thought about 10 years ago. Is actually possible now. So when you start thinking about risks and whether it's, you can actually bring in all sorts of data to help advise on what potential there might be. So now as a broker, I can advise on what their potential risks are and advise on what they would do from a known set of events. I'm going to give you just a really practical answer. What I hear about AI, I don't know that anybody knows what it's going to be in 5 years. But what I'm seeing, the implementations, is it's starting to do the work that nobody's doing anyways, or they really don't like to do. So it could be just reading an email and understanding where to actually triage what an inbound submission would be, or a claim. It could be filing documents that often aren't. So there's a lot of rudimentary work that I'm starting to see. That's actually the real good opportunity. Why does that matter? That work that was previously done that was considered dead administrative time, they can now look at and spend time with the customer. So one is honestly self-serving, is modernize. There's a new generation of technologies out there that really afford you the opportunities to take care of what I've talked about. If what you're living in is a 10 to 15-year-old set of platforms and siloed data, there's a better way, and I would say modernize and actually start to use data in a way that's actually going to help you with clients. And I don't mean this to be fear-based. Others are starting to do it. It becomes a competitive advantage if they start to do it earlier. And, when I start to look at that, if not, what the risk is they fall behind and really don't serve the market. And what we'll start to see is the negative impacts of that. So it's really meant to be all of what we talked about. Take it a step forward. The industry's ready to embrace that. I know that could sound corny, but it's actually very true. My view on this, is the insurer, the policyholder, will become a much more active participant of managing risk. And if I start to look at other parallel industries like climate tech, the emergence of different types of buyers proactively looking at where they're exposed, that they acquire a portfolio of properties. If they want to underwrite a risk from a bank perspective, other industries are starting to do it. It's because of the demand from the policyholders. So I actually see them becoming more and more interested in taking, how do I proactively manage this risk? And so that's where, from a distribution side, being able to meet that with real data, real understanding that it's going to be a demand from clients.